All right, what's up, guys? So in today's video, I'm going to continue with the market structure, but I want to specifically talk about the bullish and the bearish breaks in market structure and how to identify that, right? How you identify the breaks in market structure and how to trade that. So first, most of you probably know this, right? And you should have, you should know this if you've seen the previous webinars. You get an uptrend right here, a downtrend, right? So you see uptrend, higher highs, higher lows, higher highs, higher lows, right? Uptrend. Usually what we will see is an uptrend ends with a change in behavior of that uptrend. It could be a range. Here you have a range, equal highs, equal lows. Break that range to the downside like that. And this is where you have the break in market structure that turns into a downtrend. And then you enter a new range right here, and you have the break above range highs right here, retest of range highs. That is now the new higher low with a higher high. This is now a change in behavior of that range and a start of a new uptrend, right? So that's very, very simple. I don't have to go into any detail on this because I've already showed you all this in the previous webinars. What I want to be focusing on today is the breaks in market structure, and I'm going to be focusing on the bullish breaks in market structure, right? So obviously, when looking at shorting opportunities, it would be a bearish break in market structure. So a bullish break in market structure is basically when you have a downtrend, right? And when that downtrend breaks and you see signs of an uptrend, that is then a bullish break in market structure. So a bullish break in market structure is when a possible uptrend is forming. A bearish break in market structure is when a possible downtrend is forming. So if you have an uptrend, when that uptrend is broken and you start seeing signs of a downtrend, that is when you have a bearish break in market structure. And looking at this chart right here, what you have right here is obviously, every swing point in a trend is a key thing to watch out for when identifying what market structure you're in, right? So here's a swing point, that's a swing high, this is a swing low, swing high, and swing low, and it's also a lower high and a lower low, lower high and a lower low. And these are not only key points in identifying market structure, they are also key points in identifying horizontal support and resistance structures, right? So you can see here that if you draw a horizontal level right here, you will see that it's support here and resistance here. Draw a line here and you will see that you have support here and resistance right here. This is where price breaks the level, and this is where you have the SR flip, when price goes below support and uses it as resistance. That is when you have an SR flip, right? If price were to, instead of using this as a resistance area, or instead of breaking that low to the downside, you might see the price uses this, uses this level as resistance right here, comes lower, and then comes back up again and breaks this level to the upside. This would now be your first sign of a change in behavior of the trend and the first sign of a bullish break in market structure, where you then, if you come down and reclaim that level right here, you now have confirmation that you have a potential uptrend forming, right? So you have a bullish break in market structure. And if you look at this example right here, that's exactly what we have. That's exactly, sorry about that. That's exactly what you have right here, where you have a range right here, right? Price is in a downtrend. It enters a range. And when price gets above the equal highs of the range, when price gets above the range high, you have the first sign of a bullish break in market structure. And when you have the break and the retest of that level, you now have confirmed that it's an SR flip. Support has been flipped into resistance, and that is confirmation of a bullish break in the market structure. And that is key to identifying the beginning of a new trend. All right, guys, that is very, very important. So you look at the highs and the lows, you look at the swing points, and you try to connect horizontal levels between the swing points, and that would be the area of interest if you're looking for a bullish or a bearish break in market structure. Getting in on the if you're looking for longs and you're able to get in on the bullish break in market structure, that means you're able to get in as early as possible in a potential new trend, right? I got kids outside running around. Let's see if they raid my office in a minute. Very, very possible. So yeah, that's the whole idea of looking for bullish breaks in market structure. Right now, let's go into the live market. And actually, I haven't prepared any live charts, so we'll just have to look for some good examples of this. And I'm pretty sure we have something on a recent call. Let's see. I'm also just gonna note here, because this first part is most likely going to get uploaded on YouTube. So I'm just gonna note 7 to 8 minutes right here. Let's look at H bar here. By the way, guys, if you have any questions regarding this, let me know and I will help you out. Right, so we've got H bar right here. So remember, always when you look at the markets, always try to remember this, that in the back of your head, like it's almost like when I'm watching the markets and when I'm scanning the market, it's like I have this picture, like almost like a hologram in my head over the chart that I'm watching. So I always have this market structure and this idea of a bullish or bearish break in market structure at all times in my head when watching the market. So if I'm not seeing this, not really interested in the trade, but if I see something that just clicks and it reminds me of this, I know that it's a chart that I should be watching, right?